Welcome back to Fox and Friends. First Markets suffering their worst day yet as the financial fallout of COVID-19 takes its toll.
Is the U.S. economy heading into a recession?
Well, it may be. We're not thinking in terms of recession. We're thinking in terms of the virus. I think there's a tremendous pent-up demand, both in terms of the stock market and in terms of the economy. And once this goes away, I think you're going to see a tremendous surge.
So what can we expect? Financial advisor John Grace is here with some insight for us this morning. Thank you so much for joining us. We appreciate it.
My pleasure, Heather.
So as we begin our discussion, let's take a look at Monday's close with the Dow, the S&P 500, all the indices down. What is your take on what is to come with the markets?
Well, I mean, we should be prepared for anything and everything. And when I say that, I mean, we should not be afraid to look at our statements. We should not be afraid of checking to see the results on our accounts. We should not be afraid to use the words recession. And Heather, in my opinion, we should not be afraid to use the word depression. I think all of those things are possibilities. And in fact, in December, I stated that I thought the odds of a recession were 30%. Today, I think they are north of 80%. So there's no place to hide, and we need to get ready for, I think, some of the things that are going to happen are going to be certainly more volatility and not on the friendly side.
You say you shouldn't be afraid to use those words, but those are scary words for anyone. We take a look at the market since the start of 2020. We can see the high in February 12th, compared to the low on March 16th. More volatility ahead. What do you mean by that?
We have a very different philosophy than buy and hold or buy the dips, because sometimes those things don't work. They don't work when there may be a dead cat bounce, or there may be a false read, and we get excited on the upside, not to recognize that the downside is right around the corner. I mean, let's just notice, if I'm not mistaken, the three wild swings we've seen in the last 3 days or so, we have not seen except before the eve of the Great Depression. So, and by the way, the good news, Heather, here is on a per capita basis, more Americans became millionaires than any other time in history. So it shouldn't be something that we fear. Maybe it's something that we embrace. We build up cash to be able to take advantage of opportunities.
And that is why I wanted to talk to you today. The economic upside as the markets tank, with mortgage rates at an all-time low, and we can bring that up. Where should Americans be putting their money right now? Because it does seem like an opportunity.
It could be, but we don't know that yet, and it may be premature to get all in fully. So one of the things that we don't do as investors, and I'm sorry, my peers and I certainly don't help our investors, we give ideas about where to put the money. We feel good when the market goes up or that account goes up. We don't feel so good when the account goes down. What I'm saying is we should have not only a buy strategy, not just buying in the blind, but a sell strategy. Under what conditions are we going to sell? Under what conditions are we going to limit our losses? How can we move out of risk assets in a bad year and move back into risk assets in a good year? But we can't be premature, and maybe that's the kind of work that should be looked at on a daily basis as opposed to just throwing a dart in the dark.
But what about comparing it to how the Trump economy was prior to this pandemic taking place? This pandemic has swept in very quickly, obviously impacted the markets, impacted the economy across the board. We do believe, and we know at some point it is going to end. Do we think that the Trump economy will increase the way that it has prior to this? Is that an indication that things will turn around quickly, is what I'm asking?
Well, everybody wants to see that as an indication. We all want it to be a V-shape, but it could very well be U-shaped. It could very well be L-shaped. And let's recognize, as of last Wednesday, if I'm not mistaken, I think that Russell 2000 is back to the level where Trump took office. At this point, we are probably 300 points away from the S&P 500 being back to where it was when Trump took office. So, there have been some underpinnings here. I think the stock buybacks have been problematic. I think the free money has been problematic. I think those conditions have contributed to bubbles getting larger and larger. And as a candidate, President Trump talked about that. But now we just keep putting more air in the balloon. And we do know, Heather, that all balloons break. I mean, they just burst. 7-year-olds know that around the world.
Okay. All right, John, thank you so much. We really appreciate you breaking it down for us. Thank you for your time this morning. All right, wait and see. We'll see what happens.